This is Alan Bush with the Financial Futures Forecast for Thursday, March 26th. Starting out with the stock index futures, first of all, yesterday we did see some pressure developing, this with durable goods coming in weaker than expected. In fact, it came in at a negative number when an increase had been anticipated. Also, we had one large investment banking firm downgrading its estimate for gross domestic product. So all of that contributing to lower prices yesterday. Today we have some new negative news, this in the form of increased Mideast tensions. However, we do feel that longer term the main trend is still higher. Over the last 5 or 6 years we have seen a variety of geopolitical events that have temporarily pressured stock indices, only to see all of the indices come back to make new highs for the move. And I think that will be the case again this time. Now, moving over into the foreign currencies, the dollar index is actually lower when it should be higher based on the flight to quality moves that we are seeing elsewhere in various markets. Even the yen is higher, which is viewed as a flight to quality currency. So the dollar index lower at a time when it probably should not be. And I'm thinking that what we're probably seeing is the growing realization that the U.S. economy is slowing a bit. Recent economic numbers here in the U.S. have not been that good. So I think that is the reason why the dollar has come under some pressure recently. And I think it is not just the dovish statement that we had from the recent Fed meeting last week that can account for the dollar weakness over the last week or so. But what we are seeing, though, that is I think rather surprising, the Eurozone economy is starting to look a lot better, and the euro currency is also performing much better. In fact, all of the European currencies doing much better recently. So if we are right in thinking that the Eurozone economy has turned, that suggests that we may not be seeing the parity in the euro to the dollar that many analysts are talking about. Also, if we are right that the Eurozone economy has turned around, that would suggest that industrial commodities are likely to do a lot better. And we are starting to see the Canadian dollar and the Australian dollar, the commodity currencies, performing much better as well. So look for Europe to improve. Over now to the interest rate markets, we have seen a 2.5-week advance in the 10-year and the 30-year issues. However, over the last couple of days, some pressure developing. Even today, lower prices with the flight to quality bid not really there at the long end, suggesting that there may be a little more long liquidation for the 10 and 30-year Treasury issues. But longer term, still thinking the main trend is higher, still believing that the Fed will not be in a position to raise interest rates anytime soon. So the bull market, we believe, is still intact for the long end of the curve. So everyone have a good trading day, and once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.